Hey everybody, and welcome to the last video of this video series. And obviously we've been learning about an unbelievable simple passive income strategy that you can use and implement by learning the stock market game. And you do not have to be some extraordinary mathematician. Anyone can do it. And in this video we're going to be talking about pulling the trigger, because now you know the steps and all the idiosyncrasies that you need to know to do this strategy. Now it just comes to building confidence and implementing what you actually learn. So the first step in pulling the trigger is you want to start with paper trading. Once again, I recommended those platforms that you should use, which was TD Ameritrade or Option Express. You don't necessarily have to trade with those platforms, but I would say at least have an account with them so you can use the paper trading. Why? Because you want to be able to gain some confidence. Become familiar with the platform through not repetitions, right, but through repetitions, right? I think that says reputations, right? But through repetitions, what that's going to do is you'll start becoming more familiar with the language and how the platform works and how to implement the trades. You'll get in a rhythm. So start doing that. Start paper trading, right? Open up those accounts, right? Somewhere in the video or in the previous videos, you'll figure out, I'll have the links to Options Express or TD Ameritrade, right? The next thing is, right, once you've paper traded for a couple of weeks, right, you'll get the hang of it. So then you need to eventually play with real money. Now, let me give you some stuff when you're playing with real money. One, you need to use, I suggest you use at least $500 to start trading, right? And ideally $1,000 or more, just because when you're investing in the stock market, they have what's called trade commission fees, right? And every time you make a trade, it costs you $10. So if you're doing on a scale of, let's say, $100, when you make that trade, right, let's say you're buying something and you spend the whole $100 and you're in the market, right? The trade goes up. Let's say it goes up 10%, right? So you make $10 on the $100, right? But you're actually going to lose $10 because it takes you $10 to get in the position and another $10 to come out. So you're losing money just because you don't have enough money invested to combat the trade fees, right? So that's why I say $500 to $1,000. Two, you need to check your indicators after the market closes daily. So that's Monday through Friday. Check the indicators. Spend like maybe 10 to 15 minutes. Why? Just because you need to know, hey, is it now in a buy position, or now do I need to sell the next day when the market opens? Because you know how to use your indicators. Another thing, I say have multiple stocks to choose from, right? Why? Because if you don't have multiple stocks to choose from, and if you go to the previous videos where I'm talking about piggybacking on the gurus, right? So there's multiple stocks in their portfolio, which means there's multiple stocks that you can choose from. But if you don't have multiple stocks, right, they're not always going to be in a buy position, and that means your money's not moving, right? That means it's just sitting there, and that's the same as sitting in just like a savings account, and that's not what we want. We want the money to be moving. So have multiple to choose from, but, right, depending on how much money you have that you're going to be investing, only buy into one stock at a time. So if I have 5 stocks to choose from, I'm only going to be in a position, right, as far as actually having my money in the market working, unless there's a couple caveats to that, and I'm going to go over that in a second here, right? So when you're having multiple stocks to choose from, once again, only buy into one at a time, but, right, that's only, you're going to follow these parameters. If you have $10,000 or less, right, you're only going to own one stock in your portfolio. If you have between $10,000 to $20,000, own 1 or 2 stocks in your portfolio. Now, if you have $10,000 plus that you're investing in the market, have 5 stocks at once in your portfolio, right? and then do that all the way up to maybe $1 million or more. I don't know if anyone's going to be trading that amount, but those are the numbers, right? So don't own no more than 5 stocks in your portfolio at a time, right? Why? Why do we do this? Because we want to have that mindset that you're buying into the whole business, right? If you were, let's just take it out of stock and paper trading for a minute, right? But what you essentially are doing when you're in the stock market, you're buying a piece of that business. And if you started the business yourself, you would have all your attention focused into this business because you did your homework, right? You're not building like 5 businesses at a time. And the whole philosophy here is the same with Warren Buffett, right? Warren Buffett, he doesn't believe in what's called diversification. And what most investors, they teach, oh, you gotta diversify, you gotta diversify, you gotta diversify. You can't just be all in one sector or one industry. If you did your homework, you would you would not invest in all these other things. You want to invest in what you're confident in. And if you follow the steps that I showed you in all these videos, right, you'll have a good reason on why you're confident in what you're investing in. And then on top of that, you have your insurance, which are trailing stops. Now, let's just address diversification really quickly here. Buffett and Phil Town, they do not teach this. And I just went over that on why they don't teach that, right? You want to act like you're buying the entire business. Now, when they mean by diversification, most people, they talk about diversification in, let's say, one asset class for paper trading. They're saying, hey, well, if you're in the tech industry, you also should be in the automotive industry. You should have some mutual funds. You should have some future. That's what they're talking about, diversification within one asset class. Now, they do believe in diversification, but it's across different asset classes. So if their diversification is, hey, in our portfolio of investments and assets, we'll have some real estate, we'll have some paper assets, we'll have some commodities. But in the actual paper assets, which is stocks, they're not diversifying. They just have a couple that they're holding in their portfolio. So with that being said, right, you're ready, right? All you gotta do now, go back and watch those videos. If there's something that you didn't understand, I mean, you can even message me, but take action, right? Go ahead and do this, right? If you have some money to play with, go ahead and do this and then see if it works. Test the theories that they're saying, right? And then make your own assessment and get your own feedback. With that being said, hey, I want to thank you for your time. Message me, give me some feedback, and let me know how you're doing. Give me some testimonials and see if this really helped you out. So click the link below somewhere if you want to read more about the Phil Town that talks about all this in great detail in his book. But other than that, thanks for your time. Enjoy your day and enjoy your investing.